So technical analysis is basically human emotion, right? And this is the beauty of it. Does the crypto market have emotion? Absolutely. If you look at the lows of this consolidation pattern, right? Look at this, right? If we just draw a trend line right across here, you essentially are right at that area. So in the short term, this 26,700-800 level, very, very important. If this breaks, then you're headed to this level. I shorted a little Bitcoin right up here because, again, on a psychological basis, this was the cycle midpoint of the bull cycle. And that's concerning to me. They always say you got to flush out the weak hands. And I don't really believe that crypto really ever flushed out the weak hands. There's so much misinformation, even on the technical analysis side. A lot of people kind of think, oh, that's a pattern, that's a chart setup. And in reality, it's one of the reasons why people think charts don't work and technicals don't work is because they're finding false information. And so what I really try to do is share all the secrets that I've learned, all the chart patterns, the exact kind of definitions, how to utilize it properly in terms of trading. And again, this is trading crypto, this is trading stocks, commodities, doesn't matter. But it's really the what I consider to be the purest form of education out there. And so technical analysis is basically human emotion, right? And this is the beauty of it. Does the crypto market have emotion? Absolutely. So that's why it's going to work for it. Now, you might want to make small adjustments. Like for me, when I'm trading stocks, if you're trading Apple, 90% of the volume's institutional. So there's going to be a limited amount of emotion there. There's still emotion, but it's limited. Crypto has more emotion because it's more retail. So for instance, a technical support, you might pierce that level versus just hitting it in the crypto markets, but it's still going to get a bounce. It's still psychological. It's still human nature. And that's really what charts are. It's human nature in chart form. If you can read humans, you can trade stocks and crypto. And the interesting thing about it is a lot of bots, right? They're set up to, algorithms are set up to sell when selling starts. And so it's not so much that you do have ones that are set up to buy at key levels, but they also turn into be momentum chasers. And for me, that's actually more beneficial for me because it drives price down into these technical levels where then it'll start to reverse. And then once that reverses, those algorithms are going to cover their shorts or they're going to sell their long, and it actually works in your favor as well. What we're seeing here on Bitcoin is number one, just recent. Let me go to my 10-minute chart because this is a pretty recent sell-off just in the last hour or so. And we can see it all of a sudden starting to dump to the downside here. And if we go back to your daily chart, one of the things I'm watching here is that if you look at the lows of this consolidation pattern, right? Look at this, right? If we just draw a trend line right across here, you essentially are right at that area. So in the short term, this 26,700-800 level, very, very important. If this breaks, then you're headed to this level, which is at 25,000. So you are at a very pivotal point. A lot of people have been speculating in the crypto markets that we're just about to this big breakout. I'm not a speculator, right? And I think that's when we say that word, I'm speculating it's going to break out. But in reality, a good trader doesn't speculate. We go with probabilities, right? It's probability driven. And so for me, I shorted a little Bitcoin right up here because, again, on a psychological basis, this was the cycle midpoint of the bull cycle. And so for me, it's until it's broken, it's resistance. That's just what it is. So for me, it's short Bitcoin until it breaks above this area, in which case I would just cover and take a small loss. But ultimately, probabilities tell us it should head lower. I still can't recall the last time I saw a real bear market bottom where bullishness came back this fast as it has in crypto. And that's concerning to me. They always say you got to flush out the weak hands. And I don't really believe that crypto really ever flushed out the weak hands when it was down in the 15.7-ish range. So that's a concern to me. I also think that, if you look at interest rates where they are, the Fed has just said in their last meeting, hey, we're leaving him here. We may not hike them more, which I don't think they will do much, but we're not going to lower them for a significant amount of time. That's going to be very hard for a risk asset like Bitcoin to deal with. Got to price that in, which probably means 20-25% downside in the S&P. How does Bitcoin react to that? And I got to believe that there's bleed over and selling pressure there as well. So now listen, on a technical basis, if we were to establish ourselves above 30,000 here, and hold there for a week, then you might convince me that the lows are in. But as of now, we're not above there. So I'm still in the camp that there's still a bear market here. We might go lower. right? 2018, when the markets collapsed, risk assets fell as well across the board. And you basically go back to any point. When there's panic in any market, it tends to bleed over because people get panicked overall. The market is like being like, no, we will not accept what the Federal Reserve is saying. Part of that, honestly, is a loss of confidence in the Fed, right? I mean, the Fed has said this before, and then they've pivoted very quickly. The only thing I would like to point out about that is that in the past, when they've kind of changed their mind, like 2018, great example, they were hiking rates, market dropped by 20% in something like 6 weeks, and then they reversed and actually started cutting rates. But that was a different time because inflation was 2% or under. And that's the kicker here, is that how much pain is the Fed going to let the economy have as long as inflation's above that 2%? I do think there's a pivot point. I just don't think we're going to get to that point yet this year. The banks have tapped the window at the Fed for billions and billions of dollars. We've seen the balance sheet of the Fed soar again. Again, a lot of that's to protect the banks in the near term, but the Fed will make sure, in my opinion, the Fed's not going to let inflation go up. And part of this is a mentality of the Fed, right? So the Fed realizes, and I think politically this has been pushed on them as well, which is rightly done, is that inflation hurts middle income and lower income. When you have, free money, a lot of the rich get richer, right? So the question is which one is your greater evil? And when you're talking about middle and lower income, then it's obviously inflation is the greater evil than a market decline of 20 or 30%. What's interesting is that these crises at banks are actually going to tighten liquidity in terms of a lot of these banks are not going to be free lending money very easily that are in stressful situations right now. So in a weird way, it's actually helping the Fed tighten with the crisis that's going on. The next 6 to 12 months are going to be very, very interesting. And it's going to be scary at some points. But remember, and I always say this to people, is that scary means opportunity too, right? And so you have to this is why it's good to have a little cash on the sidelines, is you just never know when the great deal is going to come up. And just be fair, I mean, this is when the Fed came in with more. I mean, we thought we had QE before this period, and then what they did after was unprecedented. I mean, it's just amazing. And by the way, the U.S. government, right, sending checks out. I mean, there was just people were at home. I mean, this was like the liquidity bubble of the century, you could argue. I mean, it was just incredible. One of the reasons why this market, to me, is scary, and I've said this before, how we may not hit new highs for 10 to 15 years. And people, it's all the young people that haven't experienced like the dot-com collapse are like, oh, that's impossible. Like, you're insane. But if you go to your larger time frame, right? Like if you go to your monthly chart and you go back to the previous bubbles, right? And again, here's your dot-com run up, your pullback, your 2007 run up, which was before the financial crisis. That was the bull market there. And then look at what we've just come out of. And let me remove these lines. But that's, I mean, insane. like this was like a big wave. This is like a tidal wave. I mean, and like I look at that and I'm like, dude, that scares the crap out of me when I see like the amount of upside that was driven by quantitative easing and these printing of money. And it makes me aware of how bad. I mean, people to me don't have any concept of if we really got in the crap, if it really hit the fan, what could end up happening. I mean, I've even speculated that if we got the ultimate reset, we've never retraced to the highs of this double top. So charts generally, they like to break out and then they like to retrace and then they like to go higher. We never retraced because the market never got that chance because there was so much money printed.